Hello, everyone. Welcome to the Mortgage Leadership Outlook, brought to you by National Mortgage Professional Magazine and Mortgage News Network. I'm coming to you live from the M&N Studios, aka my basement. Thank you so much for joining us. So, listen, if you are watching this live, which hopefully you are catching this live. We do this every day at 4 o'clock East Coast time, 1 o'clock Pacific time. So if you're watching us live, please let us know. We'd love to see actually, your comments down below or wherever you are, whether you're connecting to us on YouTube, on Twitter, on Facebook. So please let us know the city and state that you are connecting us. So if you're joining us live here now, please let us know the city and state. We'd love to know where you're connecting from. And so without further ado, I'm going to introduce you to our guest. We've had some amazing people. It is an honor and a pleasure to introduce today's guest, which is David Lykken. David Lykken, I when I introduce David to people, I say David is like the mortgage banking consultant to the stars. You know, he's worked with some of the biggest and best names. I mean, the guy has been actually at the root of such technology emergence as Mismo, and just such unbelievable things, unbelievable experiences. And without further ado, Mr. David Lykken.
Woohoo! Good to be with you. Thank you, Andrew.
So, I'm going to share a little personal thing actually about you and I, David. When I first actually met you, I always was mispronouncing your name. It's Lykken, right?
It is. Yep. Finger licking, chicken licking, takes a licking, keeps on ticking. Yeah. Whatever.
And I always remember this. So if you get a Lykken from your regulators, David Lykken will help you. That's
that's a good way to put it. That's a good one. I have to use that. I'll give you credit for the first 2 times I use that. Yeah.
And listen, there's a lot of things that David does, for his clients. Obviously, one of the cases is when things get in trouble. That's one of the things that he does. A lot of the things that he also does is, focuses on the growth of companies, helps companies, that are, good become great. And, one of the things I'm sure actually everyone is pretty well aware of, you have, Lykken on Lending is the longest running podcast in the mortgage business, right?
I think that may be accurate. I believe so. I never really checked it out all the way out. There may have been a few out there earlier, but we've been one of the earliest ones. Yes. There was not many doing it when we started.
But I wasn't even sure what a podcast was when you came to me and said, "Hey, I'm doing this podcast." I'm like, fantastic. I'm sure actually, both of the listeners will love it. But it has grown to be actually this monster, unbelievable guests, and it's really, really a great thing. So it's cool to have you on here, but a lot of people don't actually know that you are, your main business is being a mortgage banking consultant for some of the biggest and best names in the mortgage industry. So what I want to know is, so you've been going through this as your clients have been going through all the chaos we've been going through. Tell us what is on the mind of your clients right now.
Well, I'll get there first, but when you start talking about the podcast, when I started it, and you said you're not even sure what a podcast was, I started a podcast, wasn't even sure what it was. So that's how early on it was. We looked at it, and there's a great story around that, but it's providing information. And how I got into consulting is also just touch that real briefly. We've talked about that before, but we sold our last mortgage company, which I was a partner in out in Southern California, and I moved to Austin, Texas from Southern California. A lot of people are doing that still to this day. It's a common transition. A lot of Californians heading this way. And what we did is I thought we're done. I mean, I told my wife we're retired. We did real well. She said, "So what are you doing next?" And I go, "What do you mean? Playing golf, you mean?" And she says, "No, what are you doing professionally next?" And I got quickly after she said the same thing twice, 3 times. I got the real quick understanding that maybe she wasn't too excited about me being home full time. So I started consulting 20 years ago. And you're right, I've had the privilege of doing this and consulting to some of the top companies across the nation. We talked some about that. What's on everyone's mind right now is liquidity. What does it mean to be a mortgage lender? Should I grow? Should I go get Fannie Mae, Freddie Mac, and Ginnie Mae approved? Do I need to go backwards and be a broker if I was a broker and I become a mortgage banker? I think what's on everyone's mind is best summed up is the future. What does the future hold for our industry, and how should I participate in this industry? That's probably the number one question, Andrew.
So hold on for a second. Should I go backwards to being a broker?
It's there's some that have.
Is it happening?
Because here's the deal. What we have to do is we look at our core competency. We all have to look at what we do best. At the end of the day, when challenges come, and if we're being sieged, it feels like there's siege coming at it, being attacked from different angles, whether it be a regulators, liquidity, my pricing's out of line because I'm not selling direct to the agencies. I've only been selling to the aggregators. In those kind of environments, it does cause us to go back and look at it. And you look at, like I said, there's some great companies out there that have done phenomenal, and we're seeing a growth again in the mortgage brokerage area. So if your core competency, your number one passion, your love is to originate loans, and you're not as good at being an operational side of the business, which mortgage banking really requires you to have, you're probably better off considering moving back and sticking with your core competency. So it's not saying that you failed. I think these are times where we can grow beyond our own competency. And when good times, you can do that. I've done that at different times in my career. And it's getting back to what we're really, really good at, Andrew, identifying that.
So now have you been navigating clients through that transition of going from banker to broker, which I never thought we would hear that, but so tell us about what does that transition look like, and what is actually what did that do for the companies that you did that for?
Well, first of all, in the first cycle, we were the largest firm in the country transitioning brokers to bankers, and because net worth requirements are lower, the bar to entry was at a place where you could get into it. And there are certain economic advantages that a banker has. At least there were, until companies like UWM came along, which has really created a positive environment where brokers can compete with the big guys from a technology standpoint from that. So my hat's off to Matt Ishbia and the things that he's doing there at UWM. Had the privilege of sitting down with him in his office in December, seeing what they built. It's phenomenal. And there's other wonderful wholesalers out there doing a great job. So what we're seeing right now is the trend to getting back to your core competencies. For some that we helped grow into selling into the aggregators, they're now ready to move up to selling direct to the GSEs and Fannie Mae, Freddie Mac, then Ginnie Mae. So they're at that place. So there's a surge of going two ways. You might say the waters are partying, Andrew. We're seeing some going back, saying, I'm sticking with a core competency. I'm going to probably keep my mortgage banking licenses, and I'll stay with that. But I probably going to shift my focus on execution, how I close and deliver my loans in the secondary markets. I'm going to probably go back to a broker level, especially when you look like companies. Andrew, UWM is a good friend. They were a client many years ago. Stay in touch with them. My other section. I'm not promoting just them. There's other good companies out there, but there's a good example of someone who recognized their core competencies and have really exploded their operation, and they found it. And it takes a disciplined operation, and Matt Ishbia is probably one of the most disciplined guys I met. So there's an example. Highly disciplined, can take on complexity, is willing to take on the thinner margin, complex side of the business. He's built a phenomenally successful wholesale operation.
And willing to sleep on his couch to make sure that his employees have a place to go.
He is something else. I just admire his commitment in the office at 4:30 in the morning, just as driven as anyone else. And a great guy, great company, great, amazing culture. I wish everyone could take a tour of UWM facilities. There's so many wonderful stories when I was there in December, looking at what they built, and I was just blown away.
Yeah, well, we had actually. So Matt was on. I think it was last week, and nothing but like positivity come from it, and which is amazing. I mean, to the point of, so listen, a lot of people have been throwing shade on Mark Calabria for the decisions that he's made that have negatively impacted some of the some of the servicers out there. And so I asked Matt. I said, Matt, tell us, if you're having a conversation, with Mark Calabria right now, what would you say? And he gave him a pep talk. He was actually, he said, listen, I know you're
That's
making some
bad.
tough decisions. Yeah, totally. That was exactly,
That's
you know,
bad.
it was, when he went through it, I was like, yeah, that's definitely Matt. So listen, that's great.
That's a great point, because at the core, who Matt is, he's highly disciplined. And this is getting back to your core competencies. This is someone who is very, very much a coach at the core. That's what he wanted to be. He wanted to be a Division I basketball coach. And he's taken those skills and he's put those inside of a mortgage operation and took what his dad, Jeff Ishbia, had built and has taken it to another level that, quite honestly, very few companies have levels of success that very few companies would do. So it's not surprising that Matt would be out wanting to coach and encourage and build up Eva, someone who many have thought is maybe public enemy number one. So we're seeing some indications of what's behind Mark Calabria's motives here. Some of us questioned, but BarryHabib, as you said earlier before we started this, had a great interview today with Mark and kind of walked away with a different perspective. I think that's really interesting.
Yeah, and we're going to be writing up a little story on it. Hopefully, you'll be able to see it at National Mortgage Professional Magazine. If hopefully, actually, a lot of people out there are MBS Highway members, and they got the update. But Barry shares these unbelievable updates. Yep. Well, Barry, Dan, and obviously Megan. Yep. I know you just had Dan on. Was it 2 weeks ago, right?
2 weeks ago, yeah. And I got Megan coming on. Megan just interviewed me. It's a great group. I love people with vision and have a sense of purpose and are really here. If you meet, a lot of people meet Barry and they'll get different opinions about Barry. I think everyone recognizes he's a leader in what he does. But the thing that I've come to recognize about Barry, he is all about helping other people be successful. And he's surrounding himself with that. You get to meet Megan. What a little 5-foot dynamo. Oh my gosh, she is something else. I loved her. One of the better interviews. You're doing a great job. She did an amazing interview with me a couple of weeks ago. I think she's releasing that out here pretty soon. So it's fun.
Yeah, there's no question. Listen, and I've seen her actually, as she got into this business, and how she's taken on it in a place actually that it would seem actually for someone as young as she is. As listen, she's young. She's a female. She is in.
She's so bright. You get past all of her 5-footness and power. You meet a dynamo. You feel like you stuck your finger in a light socket when you start talking to Megan. Barry told me about that, and Dan is sincere as the day is long. I love these guys. I love what they're doing in the industry, and this is kind of what you and I are about too. Is we're trying to bring some thought leadership and help to the industry. And not that I got to always have the best thoughts, but I want to try to bring it to the industry, and hopefully there's some leadership somewhere in there.
There's a lot of leadership there. Listen, every one of your episodes that you do on a weekly basis, always some great leadership thoughts going into that. Some of the greatest leaders. You got Dale Vermillion on this week, talking about the the kind of the mindset. Listen, I wanted to talk to you about actually go back to your clients here. So, what are you doing actually to help your clients set up to take advantage of the pending housing boom? So we know actually to pull us out of this recession or depression, we're going to need housing to get us out of this. So what are you doing with your clients to kind of get them set up so they can handle that business?
Okay, so first of all, you're right. I believe and share the belief of others out there that we're about ready to come into the biggest housing boom of all time in American history. Why? The reason for that is if you look at, first of all, the demographics, the millennials who have been slow to enter the housing market. They've been in apartments, they've been in condos, they've been living in places where they haven't owned it. And you require them and lock them up for 45, 60 days, and they're wanting to come out of this and buy a home as fast and furious as they possibly can. Now, we can't discount the Gen Zers. My youngest daughter, is 22, turning 23 here in a couple of weeks, just got married to her college sweetheart. Great guy. We're so proud to have him as a son-in-law. And they're now already talking about going and buying a home. So they're at Gen Z level. So these people, these two groups are going to fuel the housing market. But the question is, what is housing finance going to look like? And that's the bigger question. We know this technology is playing a much bigger role in it. what Blend, Roostify, and all those that are making the mortgage origination, the painful process, go well. That is actually helping ease and take out some of the pain out of the process. I recently refinanced my loan and my own mortgage, and it's like I put it off, and the last time rates were low, Andrew, because if I go, oh, I hate the mortgage process. I've been in it for 47 years. I hate it. It's horrible. And then so I went with one of my friends, and he called me and said, Lykken, you got to take advantage of these rates. I go, okay, I'll do it. He sent me this link. I went through it. I filled out the application. I was approved in less than an hour, preliminary approval. We got everything uploaded. I had a full approval, unconditional approval, within less 48 hours. And we just had to wait for the appraisal. It was phenomenal. It was one of the most painless things I've gone through. So technology, and that lines up. So for those that are out there, we're talking about how to prepare. You better be taking care of the advantage of the technology that's out there right now if you're going to succeed. Otherwise, you are going to look like a dinosaur, and you're not going to reach these two generations that are entering the market. The other thing we're really advising companies on, number one, is find what your core competency is. For many of them I got to go to become a Fannie Mae, Freddie Mac, Ginnie Mae seller. We go in and analyze that. Now, those that we believe have the ability to grow and go up to that level and are willing to commit to the journey rather than just go get me in there and get approved. I just was on a phone call, and I'm planning. In fact, I'm recording an interview with Gregory Keith, who is Senior Vice President, Head of Risk at Ginnie Mae. And he was talking about the number of applicants that are it's like barbarians at the gate. They're all trying to come in. And he says, you can tell that they are not ready. It's just looking at the package. Now, I don't mean to quote him on that. For those of you who got packages in there, go for it. All foresee you do that. But there's a process, and what we do is we prepare our clients so that when we bring them into Fannie Mae, Freddie Mac, or Ginnie Mae, they don't get turned down. I'm pleased to say we are batting 1,000. We've never had an application that we've submitted get turned down by any of the Ginnie Mae for specifically, which is the hardest one to get approved with. The key to that is we haven't submitted everybody until they're ready. And there's some that are probably 5 years out, and they might as well start the journey now. What they have to do, how they have to mature from many aspects of their business, from a balance sheet, from a talent standpoint. So we're helping people to go to where I think they're best suited, and they don't always agree. And if they don't, tell them to go for it, apply, and then they usually come back and talk to me afterwards and say, yeah, you're right, that didn't go so well. We got turned down. And I go, let's come back and let's do it right. So that's one of the things we're doing. One of the many things we're helping them do.
I think this is an appropriate time to show the email address. If you're considering right now, becoming going the route of becoming a Ginnie issuer, please email David. Yeah. He'll help you. He'll let you know whether you're 5 years or 5 months away from being able to do that.
Listen, we're going to take it slow. And we're buying into what Ginnie Mae is saying. We got to make sure the people that are coming into the program are qualified and are going to become issuers. I think there's 400 some issuers on there. If I understand correctly, 65 of them have never participated. In other words, they just got the approval. That comes at a great expense to Ginnie Mae. You're not going to most likely get in unless you get accepted to the program, and it should be viewed as a real honor unless you plan and can demonstrate the ability to become a responsible Ginnie Mae issuer. So the key is be patient. Let us work with you to grow up to that. And there's some great rewards to get there. So anyway, so good to see so many. I just see Joel logged in and said hello. So hi to Dad, Joe Berman. He's making comments. Jay, good to see him on here. Adam, fun to see from Maine. And then Christy in Vegas. Love Vegas. Anyway, so shout out to some that are logging in and putting in some comments here.
Yeah, and please listen, if anyone has questions about actually becoming actually Ginnie or Fannie Freddie seller servicer, please ask them just about growth opportunities or about actually going backwards, as you say, to becoming a broker. So now and I want to ask you this. One of the things that you mentioned there is using technology. I had, a few weeks ago, actually about a month ago, I had Brian Covey, who's with Loan Depot, is a regional with
Yep.
Loan Depot. Great guy. He said something really interesting that I'm sure actually is going to, as a former software company executive, as one of the people actually who was helped create Mismo. You'll appreciate this. He's I might be misquoting him, but he said that tech, that usually a lot of the problems that we have in the mortgage banking business are technology problems, not people problems. Don't throw people at it, throw technology at it. And especially during times like this, ramping up hiring. If you can do something with technology, these are going to be fixed expenses that you're still going to have to pay for, or let these people go.
Yeah, so it's really interesting. So David Matthews and I, which is out there, and we're doing an interview here, and we started the Echo One Applications Committee. The MBA started this back in the mid '80s, and I was the first chairman of that committee. And out of that committee came Mismo, came all the data standards, so much of the technology initiatives that we have. And it was a result of that is because I had started the software company in my garage that later became Interlink Software. So that was one of the companies I had. We were one of the first LOSs out there. Many other people got involved. Many other people made that thing successful, but it was originally the vision that I had for that was mine. And so I see the power of technology, and let me tell you, the biggest mistake a lot of people can make is say that technology is the end all be all. While technology is playing a bigger role, this is a relationship driven business. We've been saying that. I've been saying that for 47 years of my time in the industry, and it's going to stay a relationship driven business. So I see technology as a great enabler so loan officers can triple, quadruple their volume by using technology wisely. We started out talking about core competencies. What is the core competency of a successful loan originator? It's their ability to form relationships. So use technology, but to enable the transaction, but you stay focused on the relationship, and you can have volumes that are substantially higher. With some new technologies coming out, he who wins is one who has the best relationship skills and is best at successfully implementing and utilizing technology, Joe.
So,
Chad, so I'm thinking of your dad, Jim, Andrew, sorry. Yeah, but working with the Bermans for so long, I always switch the two of you around.
I get that all the time. It's an honor to be actually confused with my dad.
He's a great guy. Yeah, love your dad, love your family. Yeah.
So I want to ask you, as far as AI, do you think actually AI will ever have a place where it takes some of the role of what actually traditionally done by physical human beings in the mortgage business?
Oh, absolutely. This is one of the great enablers for getting the loan officer out of some of the busy process or connecting to the consumer. Once we're connected with the consumer, the human element's great, but connecting with the consumer for the first time, AI will give you hands down one of the best advantages. For example, there's a company called Conversica out there, probably one of the best AI tools when it comes to the sales side of it. They're so expensive, nobody in the mortgage industry can really afford them except some of the biggest of big companies. The ones that there's a company that's right in your backyard, AI Assist. They're an advertiser on my podcast, so I'm giving them a little bit of a plug here. But here's the deal. You can go in and use AI Assist to connect with consumers through email and through texting. I'm a big fan of texting. Texting has a 97% response rate within 5 seconds, 3 to 5 seconds. It's read, so you learn how to communicate in a very quick manner. You communicate in a way that is guaranteed to make the connection and draw them into a relationship. So if you have the right words, you can use artificial intelligence by trying different means. Artificial intelligence will get to know the person, see how they respond, and change up automatically through intelligence, change up how they talk to them. And one of those approaches is going to be right. So you hook them, then you've got them on the line. Now that's where the loan officer starts engaging and really starts working with it. The artificial intelligence will never replace, in my opinion, as strong as it is, and I'll tell you about some advancements that are happening right now that we'll talk about in just a minute, but it will never replace the human that gives you the validation that you're getting the right loan program at the right rate at the right terms. So and you're doing a smart move. A human, they want to talk to a human. My brother has a long time, fair known time ago. My brother in Seattle was a VC, had a VC firm, and they invested in an avatar company. That's the next thing that's going to be coming right along behind artificial intelligence. And they said as avatars combined with artificial intelligence, again, when they ran this test, it was artificial intelligence wasn't as far advanced as it is now, but they ran this test. And what they said is, if I'm going to invest in this company, I need to find out if avatars are going to be the future. So they went to the generation that they believe would be using this, and they said, let's find out what a young person, someone in high school, confronted with a crisis would use. And an unwanted pregnancy is a pretty big crisis for a high school student. So they put up an avatar and a human. And what would, to initially engage on some working through the counseling that was necessary, what to do with this new crisis that's in their life, what was the percentage of people that chose the avatar with intelligence behind it versus a human who is a trained psychologist? What would you guess, Andrew, was the percentage?
I mean, so listen, my instinct would say, actually, I want the empathy from the person. I want to, because a computer can't have the empathy. So I mean, naively, I would be saying that 90%. Okay, obviously there is something here, but so maybe 70% people would want actually the human versus the AI.
Yeah, what's really interesting, 86% went with the avatar being talked to by a computer, and they knew they were being talked to by a computer. And here's why. There was no perception of judgment, because along with an unwanted pregnancy comes shame. There's some level of shame. And the human they feared was going to get them judgment. And so they had more confidence in a computer. You look at the credit scores, you look at about a debt that has come, most of these millennials are carrying out of school, the Gen Zers are. There is a lot of guilt, Andrew, being associated with, I'm coming to this market to buy a home and I still got all this debt. I feel so sick about it. I do this. And so I think there's going to be a place for avatars and artificial intelligence. But once you're in, and once you're in that process, you bought into the process of buying a home, the human's going to do this. So I believe it's possible that we're going to see within the next 5 years, loan originators, top loan originators closing 50 to 75 loans per month.
Wow.
Think about the commissions. Think about the earnings potential that means. Now, that does mean they can earn a little less, which helps their employer, cuts down on the cost of the commissions. But if you can increase that kind of volume, it's going to get to the point where the loan officer is going to have a different skill set because of the intelligence and the tools that we're bringing. It does not mean we're eliminating it. So a lot of loan officers get paranoid. That means I'm getting out of a job. No, what you're about ready to do is get into the best part of the job. That's all you're going to have to do. The rest of it's going to be done.
That's right. But and really, so you're not talking about actually, they're not doing the pre-qualification. Oh, we got Jason Frazier just joined us.
Oh, Jason! Woo-hoo!
Speaking of podcasting, I have actually two podcasting legends right here.
I got to tell a quick story of Jason. I have one up on Jason. I did an interview of his mom, Marilyn Richardson, who is the president CEO at the Mason McDuffie before he did. And so it was so much fun. And she told him about it on the interview. So Jason's getting a chuckle out of that right now. Marilyn's an amazing woman. She broke the glass ceiling, one of the first ones to go through. And so on Mother's Day, we had a Jason and mom on Mother's Day last year. So it was a great, great podcast.
I listened to that. I know that. I know exactly. I listened to that episode. That was great. Great episode. That's fantastic.
I should also say we did one with Marsha Davies and Emily Davies. Marsha, of course, the NBA, she was a part of. That was another one too. So we had two great double hitters. That one, it's really good. So,
okay, wow. So who are you having on for this Mother's Day?
I'm working on that. Someone out there that's got a great story about a mom. It's in the mortgage industry. Come on, bring it on. I love it. We got that coming up. That's Mother's Day. Oh my gosh, that's this weekend.
Yep, that is.
I am way out. COVID has totally messed me up.
Well, fortunately, I was blessed to have actually Amazon Fresh delivered yesterday, and I got some. But fortunately, my wife is never going to watch any of these episodes, so
Yeah.
I don't have to worry. I got all of actually my cards, the kids' cards, and even a little gift through Amazon and Amazon Fresh. So thank you, Amazon. Appreciate that.
Yeah.
So listen,
We appreciate them until they start coming into our mortgage business. Stay out of the mortgage business, Amazon. We don't need you. You will screw this up big time. Don't come.
Well, that's what we hope, and it's I mean, really, actually, but because of what you just said, like, because it's all about relationships, Amazon can never do that. Amazon actually is just about the
They're transactional. That's what I went around when I was with Vince traveling on the roadshow. I did the roadshow a couple of years ago with Vince Valvo, who you guys are now proud of. That's an amazing merger of talents. Kudos to Vince and you guys for what you've done together. But I was on the roadshow with Vince speaking at all his conferences, or a number of them that he had around the nation. And we talked about that very thing. That's why I believe Amazon is going to come. They're going to try to knock on the door. They think they can do it. But it is a relationship business, and why I predict the Amazons of the world are going to fail. Great at transactions, great at getting products, things delivered to your door real quickly. But when it comes to a more complicated transaction, I predict they're going to struggle if they are so foolish to enter the space.
Yeah. We shall see. So now let me ask you this. You used to do a lot of traveling. Like, you would go meet with your clients in person, right?
I love doing that. Yeah.
So now, obviously, when was the last time you've actually been in an airport and done any kind of traveling?
I was literally as COVID was hitting the height and the airlines were where everything was getting shut down. I was in Phoenix doing due diligence on a subservicer, the money source. I was doing that on behalf of a couple of my clients. That was a great meeting, great company. So I travel nonstop. I love getting out. I'm a people person. I'm a relationship person. Zoom works. These kind of things work real well. However, there's nothing like being in the presence of somebody. And so I get better REM sleep on at about 40,000 feet than I do sometimes in my own bed. So I do real well. I love it.
Interesting. So speaking, actually,
I will be back on the road very sure. It's very soon. Let's put it that way.
Fantastic. And I'm sure your wife is, please, can you get out of here? We want you back on the road. Like when she wanted to get you out of retirement, and back actually, in working, sharing your gifts to the mortgage business. And now listen, I want to get a little personal for a minute.
Yeah.
I know a lot of people talk about how the coronavirus or COVID-19 is something actually it's removed from us. Like, a lot of people have not been impacted. They're not actually. I mean, most of the country is not in New York or California. That's been hit hard. I mean, we've got in our county alone, there's thousands of cases. I know personally a lot of deaths, but it hit you personally. Would you mind sharing, talking a little bit about that?
Yeah, really. We went on a trip. We took a quick business trip to England. We met up with some business partners over there. And we don't know if it was on that trip, but again, it was just before COVID really took off. But my wife came back from that trip and wasn't feeling well. And we just thought it was a nasty cold. And we just thought, but it just got worse and worse and worse. And my wife, I watched her have a baby, natural childbirth. I've seen that girl go through that wonderful, amazing lady go through some amazing difficulties physically and has been strong. I've never seen anything knock her down, Joel, on this. You went through this. You and your wife, you had COVID twice. It just absolutely took her out. She did not have to go to a ventilator. And here's the other thing, is she tested negative twice. Her doctor is a gal that's here in our community, happens to be the COVID director for our county. She sees COVID cases constantly. And so she said, Nancy, I don't have to test you to know that you've got COVID. These two tests failed, which kind of tells, we were talking before we went live, how many cases are not been confirmed that are out there. And then how many cases have been counted multiple times. I don't know that we're going to ever really have an accurate accounting of how many people had it or didn't have it. So my wife's case, she never got she got diagnosed by her doctor having it, but never came up with a test. So my concern is how many other people had it and were struggling with what they thought was a real ugly flu.
Yeah, so my wife works. She's a nurse. She happens to works with with a county, letting actually people know when they test positive. And what she keeps joking about, she's like, if you get it, hopefully you get actually the best kind of COVID-19. So there's one flavor where you just basically you lose your taste and your smell, and so. How many people actually probably have had that where they lost their taste and smell and they didn't think anything of it? They didn't think actually, hey, I'm going to go get tested because it's just losing taste and smell. So the numbers they're so inaccurate.
Yeah.
We don't know actually whether it's inaccurate this way or this way. We just know actually it is definitely real. It is definitely impactful. We should be careful, but. Do you feel we should be opening back up and getting back into businesses?
I think we are peaking over. I'm one of the ones that really question some of the governors that are making the decision to continue the lockdown. What's really interesting is they're falling down party lines, and I don't want to get into politics, but if you look at the states where they're continuing to keep the lockdown going, in every case, it's a Democratic governor. If you look at the mayors that are getting kind of over the top, and I'm not, again, folks, I'm not even going to tell you if I vote Democratic or Republican, but the bottom line is, well, I could say I relate to the color that's behind Andrew. I guess you could say that's a hit. But the bottom line is that it doesn't matter. I think what we do need to do is get people back to work. I think there's going to be a long debate. We're going to find out in time that we're probably over the peak, and it's time to get people back to work. I'm concerned about the economy. When the cure, like they've said, one of my doctor's friends said, we have had a cure for cancer for a long, long time. It's called chemotherapy. The problem is it kills the patient. So when you have a cure that's killing the economy, killing the country, I start looking at it when certain people want to continue it at the expense of their state or their states or counties' economic demise. You start beginning to wonder, what is your real motive here? So again, that raises a question. I'm not sure that I want to go down with many, because it's so contentious. And I having had a wife who had COVID, I certainly am very, very respectful of the contagious nature of this, and I wouldn't want anybody to have it. But what I want to see all my neighbors file bankruptcy, lose their homes, lose their businesses to try to prevent it from spreading, I'm not sure I want that either, Andrew. So I'm glad that that's above my pay grade. Someone else gets to deal with it. I'm back to work. And I never really stopped working. You've been going strong the whole way. I didn't get it, immune to the thing, and so just going strong.
This is for you and for our industry. These are unbelievable times, and listen, sure, there's some financial uncertainty. We don't know as far as the forbearance, but what the future is going to look like. But overall, we're actually in it's a great time to be in this industry. Great time actually to know that we're going to help actually get out of this industry. So I want to actually know, for when you start working with your clients, go back actually to your clients, because I could ask all day, actually sit here and ask you questions about your clients, because I know you've seen it all. I know you've seen actually some, the best and the worst stories. Tell us, what is a common mistake that you see mortgage bankers making when they first start working with you? Like, is there something where you have a checklist and you say, okay, I'm sure they're going to do this wrong? What are some of the common mistakes that you see?
Well, I think there's one, and it's summed up with a great success story. And he said himself, you can see it, it's all over the internet, and it's Casey Crawford. Casey Crawford Googled how to start a mortgage company. He had the presence of mind of saying, I don't know anything about mortgage lending. I need to go get that. So he found me. I came out. He found my website. I used to have a walk-on video where I walked on a website and I said, so you're thinking about starting a mortgage company. You should think about this, 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 and this. And Casey loved it. And he contacted me. We became immediately closest of friends, and we still are to this day. But he says in his testimonial video, he says, if I've done anything wrong, is I didn't keep advice or Dave Lykken and his team around me for a period of time, because he went through some dark times. I'll never forget the phone call where we were going through a very dark time. And he goes, Lykken, I'm not even sure I should stay in the business. And he reached back out to me. I said, do this, this, and this, and give it 90 days. this thing will turn around. I can almost guarantee it. It sounded like take 3 aspirin, go to bed, call me in the morning kind of thing. But sometimes when this is a complex business and we get caught up in it emotionally, when you have everything on the line, Andrew, it's so close to get caught up in the problems that are right here in front of your face that it is so important to get advice. So get it from somebody. It's myself. There's many, many good consultants. Just make sure they have the been there, done that t-shirt and that they've lived through owning their own company. That would be the only thing. Is if you're getting advice from someone, make sure they have the been there, done it t-shirt. That's my number one advice. So biggest mistake is not getting advice, or once you got advice, stop getting it. By the way, I'm back in Casey's life in a big way, and I'm getting a chance to play an advisory role in there, and we text back and forth almost daily at sometimes in the midst of something. So it's get good advice. The winners do that. Why not start out and stick with it all the way through?
Yep, it's like you're a coach. You're like a coach to the mortgage banking elite.
And it's a fun. I mean, UWM, watching what Matt has done since he took over the company from his dad Jeff. It's an amazing story. I love these stories. And to walk in their office and have them say, "Lykken, you were so instrumental at this point in time or at this place." It's a real honor. And so I would do this if I didn't get paid for it, because that's how much meaningful it is. Now, that's not a hint that you could negotiate. I'm not doing it for nothing.
There's only
I get paid well.
Yeah, listen, there's only so many hours in the day, and that's the way actually you get a lot of those hours by writing a check to get access to this experience, to have actually, the person that was there actually on the ground floor when movement started, was there when UWM started, and the countless other mortgage companies that you work with. So if you were right now, someone actually was going to get into the mortgage business, and they we're planning on becoming actually a regional player. Would you actually, say, focus on being a broker and being that transaction? Because we're seeing actually, the mega broker. We're seeing actually people actually who are large brokers, whether it's, I believe Better, I believe is mostly a broker. There's a lot of other players actually that are big giant brokers. So would you suggest actually, going that broker route? Because listen, you're limiting your liability. Your ramp up actually to be able to be a mortgage broker is significantly less than becoming a mortgage banker. Or what would your suggest for someone coming into the business now?
I know Vishal, I had the privilege of meeting Vishal over at Better. I think they are mostly a banker for the most part. They maybe do some brokering. And I think he goes, here's the number one thing. Find out what you're really, really good at. I work with a lot of professional athletes that get into the mortgage industry. And when you work with a true professional athlete, one of them was the quarterback for the Bengals. And I worked with him early on, and he was considering getting the mortgage industry. He made a good decision not getting into it. Not that he wouldn't have been successful, but it wasn't his first and most important passion love. And I tell this story. And what Jeff said was this. He says, Dave, when I was young, I could play basketball. I was a natural athlete, so I could do all the sports. I could do all of them. And he says, the one I loved the most was really baseball. But my coach came along and said, what you are amazing at, you love baseball, but where you're really amazing, and we've not seen a quarterback. I believe you could go to the pros as a quarterback. And he did. And so he says, so the baseball coach hated my football coach because I dropped all other sports and I focused on football. And he was a 17-year career quarterback, I think, for the Bengals. And so I think most of his career was there. But the point is this. Find out, number one, what you love to do, you're passionate about, and most importantly, what you're good at. I love golf, but I suck at it. So I am not going to go turning pro. I can get out and enjoy it like someone else. I'm not even that good at it. But so golf isn't in my future. I'll go out and enjoy it and drive the cart and get everyone to laugh. But what I love to do is helping businesses thrive. And what's so exciting when you build companies and you're making a contribution. Most of us have to work. Most people have to work, and they go to work. Why not work on creating an environment where people love to go into their office? I have a saying that my staff uses, TGIM, Lykken, TGIM. Thank God it's Monday. I get to go back to work. And we need to create companies where we have that kind of culture. And if you do that, think about what it does. It helps marriages. It helps them enjoy things that are healthier, and they're prospering when you find that. So if you're good at sales, I would say start out at origination. Get that down really well. If you do develop the skill and you do discover that you have really good operational skills, and that's a part of it, and you get it confirmed by those of us who have been through the full journey all the way up to the top and back, then you can make that transition over. So my recommendation is find out what you're good, passionate about, most importantly, what you're really good at, stick with it with tenacity, and then get others around you to see if there's an opportunity to grow.
Testimonial just popped up on the screen right there. David, you're meeting with me and Andrew over 12 years ago, planted a seed in our careers that transformed us, transformational mortgage services. Mortgage Solutions transformed us completely into an NP and M&N. Your insight was invaluable then, and your acumen and insight continues to change our lives. We thank you. So so listen, this is a great example of your core competencies. We sat down in that hotel room, and
I remember.
What are you guys
Jericho? We were right there in Jericho, Long Island. You came over. It was at the Hampton Inn. We sat down. I'll never forget that. It was such a good time. And when Joel, you guys were looking, and I remember that so well because you guys were looking, we have this opportunity, we could go here and go here. And I said, guys, what you are, you're good at this, you could do that. But the thing you're most amazing at is reaching mortgage loan originators. Stick with that would be my advice. And it guided you for a while, and now look where it's got. And so, Joel, thank you for that. Yeah, I'll never forget that. That's my number one thing is help people find their purpose, identify their passion, find their purpose, and get a plan underneath them, and it creates happy, successful careers and lives.
Yep. So focus on your core competencies. Focus what you're really great at. He's saying no. It was a airport hotel at JFK.
Oh, is that what? Yeah. Okay.
Actually, I remember.
Hotel. Forget it. Hampton.
No.
It was at another hotel.
You were actually visiting a client actually that was in Jericho.
In Long Island. Yes, I was. Yeah. So there's still a client too, by the way. Still a client. Yeah.
I'm sure. So focus on your core competencies. Get expert advice, and always try to get advice from people that have that experience. 3 great actually things. Actually, if you follow those things, you're going to be wildly successful. And once you are successful, email Dave, and he'll take you to that next level.
Yeah, here's another one. You know what the definition of a grave is for someone that's walking around? It's a rut. Rut is a grave with both ends kicked out. If you're in the rut of just being a originator and you want more, challenge yourself to grow and get beyond that. Who knows? You might be the next Movement Mortgage, a Loan Depot, or anything else. I believe in challenging us and growing. I think that's so important. And you don't know what you're capable of until you push yourself. Then you can get people around you like myself and many other great consultants who are out there. Dale Vermillion was a great interview on Monday on my podcast. He'll tell you the facts. I'll tell you the facts. You're not suited for this. Stay with this. Or no, you're capable of doing this. Go for it. So it's those things. So don't get stuck in a grave in a rut, which is a grave with both ends that kicked out. Get into you maximize your full potential, and as well as staying with your core competency.
Fantastic, David. Always great hanging with you. Always great spending time with you and being able to, soak some of your knowledge in. It is really a pleasure. I'm, while I'm upset actually, we didn't get to go have pizza at, at the MBA secondary.
Don't have pizza with Andrew Berman if you're not in New York. He took a video of me eating a pizza with a knife and fork, and he's videoing me and posting it on Facebook saying, this guy's from Texas or some other state. He didn't know how to eat pizza. It was so funny. That got a lot of reviews and a lot of laughs. Appreciate you so much, Andrew, for what you've built on your dad's legacy, what you're doing, and now you combining with Vince and everything. My hat's off to you and wish you all the continued success.
Thank you, Dave. Appreciate it. All right, Dave, I'm going to take everyone out here. Thank you so much for joining us.
Thank you, everybody. It's great seeing everybody. All the comments. Thank you.
Okay, everyone, thank you for watching another episode of the Mortgage Leadership Outlook. So tomorrow, super excited. We got Terry Clemens, who is the executive director for the National Consumer Reporting Association. We're going to talk about what people are actually seeing on the credit files, what the impact is going to be, long term. At least that's what we feel, what he feels is the impact. So join us tomorrow. Got a stellar lineup of guests we're working on for next week. We do this every day, Monday through Thursday at 4 o'clock East Coast time.